All right. In Jesus' name, Father, we thank you for yet another opportunity to come together. Thank you for how far you've been helping us on this course. Thank you for your wisdom and understanding be that exalted in Jesus' name. I will pray you help us, give us understanding. In Jesus' mighty name we pray. Amen. So, please, I will say together. I want to be sure. I will stay together.
Yes.
No. All right. So, if there's any issue of maybe network issue, you aren't getting my voice, you aren't seeing my screen, please just notify immediately. All right. So let's just go straight into the class. Ready? Let's go straight into the class. So we've got here today we're talking about starting from market support and resistance, right? Support and resistance. Are you seeing my screen too? Are we seeing my screen too? Can you please answer to that question? Are we still seeing my screen?
Yes, sir, I can see it, sir.
If you ask questions, please just talk. All right, so today we're talking about support and resistance. Now, basically, on a single time, support is the area on the price chart that indicates traders' willingness to buy. Is the area on the price chart that indicates traders' willingness to buy. That's a very simple definition, I suppose. I don't expect us to find difficult with that. All right, so support is the area on the price chart that indicates traders' willingness to buy. Likewise, resistance is an area on market chart that has trouble breaking through to its new highs. As simple as support and resistance. Look at it. Look at what we've got on the screen. Look at this. We've got this. Talking about support and resistance now. Look at this region here. We've got these two regions. I'm coming. Let me do this. All right. So we've got this region. Let me change the color of the pen. So support is a place whereby buyers are always willing to buy, and here is our support. Right? All these points you see here. This point. These are our support zone. This line entirely. These are support. What are you seeing here? You are seeing every quick tap we have on that place, it always bounces back up. Every quick tap we have on that place, it always bounces back up. Isn't it? That is what we are seeing. Every quick tap we have here, look at it. Buyers are always in and drag it from here to this point. Came down, they push it back to the upside. Came down, same thing over and over again. So there's a point whereby buyers are always ready and willing to put in their money to buy. And resistance is simply where on the price chart, market has difficulties breaking through. Look at this point. Market find it so difficult to break through these points. So this is what we call resistance, support, and resistance. So take note of everything I'm saying here. Now, what happens at every resistance zone? What you can do there is that you sell at your resistance zones. And you buy at the support zones. Do you get that? You buy at these zones, support zones, and you sell at resistance. You buy at support zones, buy at support zones. Simply means when you buy, market is going to go up, and this is giving you profit. This, if you are sold from here, came all the way down, it's giving it profit. As simple as that. So you sell at resistance, you buy at support. Do we get that? These are some of the simple questions I'm going to ask. You sell as resistance, you buy as support. Are we clear about that?
Yes,
Are we clear about that? All right, so you sell at resistance, you buy at support. You sell at resistance, you buy at support. So support is zones where markets buyers are willing to make new purchase. Buyers are willing to make new purchase. Buyers are willing to make new purchase. All right. Areas where buyers are willing to make new purchase. Resistance are areas where sellers don't want to see this market has gone up so much. Let us sell it to the downside. All right. So buyers want to see this market has gone down so much. Let us push it to the upside. As simple as that. All right. That is all about support and resistance. Very simple. Very simple. And one thing you do at resistance is that you sell. One thing you do at support is that you buy. Am I recording this? Yes. All right. So that is for support. Any question on support and resistance before I go forward? Now let me explain this. Let me explain this first. Wait. You see something here? Looking at this, you see this breakout here. See this breakout here, and you see this break to the downside here. Now, this talking about this breakouts now. For this side, it simply means this resistance zone, this zone was unable to hold this trade again, and it's broke to the upside. So resistance failed. Resistance failed. So it's broke to the upside. It simply means this resistance zone now, this particular zone now, has turned towards, has turned to support. That's turned to a support zone simply because market is going to just retrace back here and push it to create another higher high for us. Number one, this is a break of structure, or this is a change of character to the upside. Change of character, we have broken this initial, and well, this has been a ranging market. It has been a ranging market, and still call it break of structure as well, because it's not this. We can't call this a lower low or lower high because it's been ranging. We have equal highs, lower highs here. So have a break of structure to the upside. So market will come back and retest this break of structure and continues the upside movement, so giving us a clear bullish market trend. Likewise, so this resistance has turned to support. Likewise, this point as well, this support zone, this particular zone failed to hold this particular position here. We came from all the way from here. Let's assume market has been doing this. So market came, broke below this. That means this support has turned to resistance. At this point where it broke below, has turned to resistance. This support has turned to resistance. So it simply means market couldn't hold and it broke down. So that is that about that. Any question on support and resistance? 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 So I said support zones are zones on the price chart that indicates traders' willingness to buy. Resistance an area on market charts that it has trouble breaking through to its new highs. Are we clear on that? Are there questions? If there are no questions, we go to demand and supply zones. Demand and supply zones. Supply zones is where many people wanted to sell, causing the price to fall. It's just vice versa. It's just synonymous to support and resistance zone. But this particular time is used under smart money concept. That's just different. Demand, supply, order block, liquidity, all of that, they're under smart money concept. So demand and supply is what I use basically. So a supply zone is where many people wanted to sell, causing the price to fall. Demand zone is where many people wanted to buy, causing the price to rise. Just as simple as that. As simple as that. So there's nothing much to talk about that. We'll go to the live charts. I'm going to explain that thoroughly. Based on our slide, what topic I was supposed to talk about after demand and supply? I'm talking about liquidity explained. All right, liquidity. All right, let me just let's keep this for now. Let's keep this for now. I didn't really write anything on this. Let's keep this for now. So, thus far, do you have any questions before we go to the live chat and use this? Because we are going live from next week. are going live from next week. So I want us to learn some entry strategies. We have demand and supply. We're going to check down on the live charts. Fibonacci retracement, we're going to dwell on that more. Psychology levels, trend lines, all of that. So, and top-down analysis I've been dealing on so far. So, any question before I continue? Any question before I continue? Any question? Any question? Any question? No one is responding. Do you have any question? Do you have any question? Are we on this call at all?
Yes, sir.
We don't have questions. That is perfect. We don't have questions. That is very okay. All right. So let's just where is the slide? So we're talking about demand. Oh, we are going to entry strategies now. Strategies as which you can use to enter trades, right? How can we enter trades? We're going to dwell on that. Okay, for some people that have been joining the trade analysis course, they have learned that already. We have learned that already. So, but today we are doing more of that. So, I just want you guys to pay very close attention today. This aspect is very important because the thing is that let me tell you guys this thing. The thing is that I won't always be there, though I'm committed to be giving you signals throughout this journey, right? But the idea is that it's not enough for you to just receive signals, but that you can sit with the chart yourself and analyze the market and know what the market is going to do yourself. What you just do is that maybe you just send me the analysis. I'll just, this is what I expect this particular pair to do. And I'll just check it through for you, right? So that's how we're going to talk about this. So entry strategies, I want you guys to just write it down. Number one, write demand and supply zone because we want to follow that order to talk about it. We have demand and supply zones. Fibonacci retracement. Write it down, and I will be asking once I go to the markets charts. I don't want to come back. I don't want to come back here. So I'll be asking us. So the first one is demand and supply. The strategy we are using for our entry zone. This is the major strategy I use, basically. This major strategy I use for my, for my trade. It's the major strategy I use. Demand and supply. Number two, Fibonacci retracement. Number three, we have psychology levels. I use this one so much as well. Trend line, I don't really use it. Top-down analysis. And marking out zones in the market. So those 1, 2, 3, 4, 5, 6. Oh, 1, 2, 3, 4, 5. Demand supply zones, financial retracement, psychology levels, trend lines. Those are entry strategies, but we're going to talk about top-down analysis as a subtopic and marking out zones under the same course, right? So let's get started. We are starting with marking out zones, and we are starting with top-down analysis and marking out zones. So I will now come back to the entry strategies. So let me just share my screen. Let me share my screen. All right. Are we seeing my screen now? Are we seeing my screen?
Yes, sir.
All right. So let's talk about marking out. Oh, this is my trade now. Okay, let's analyze a different pair entirely. Let me just clean out all of this. And we'll mark out zones. Once we talk about top-down analysis, please pay very close attention to this. We're talking about top-down analysis. Now, let me clean all of these markings I've done here. I've done a lot of markings here. Oh, no problem. We're going to do that again. So top-down analysis is a system whereby you analyze the market from wider time frame to the smallest of the time frame. It's a system whereby, or method whereby you analyze market based on a very wide time frame, wider time frame to the smallest of the time frame, suitable to your strategy. So on the time frames we have, this is the trading field platform. On the time frames we have, you can see here we have Based on ranges, we have 100, 1,000 range, 100 ranges. We don't use that. Then per days, we have 12 months, 6 months, 3 months, 1 month, 1 week, 1 day, 4 hours, 3 hours, 2 hours, 1 hour rather. We have 1 second, 5 seconds, 10 seconds, 15 seconds, 30 seconds, 1 minute, up to 45 minutes now. So as a day trader, what I use basically for my top analysis is that I start checking. I want to check the trend of the market, general trend of the market on a monthly time frame. What is the market doing on a monthly time frame? What kind of candle formations do we have? At what zone is the market at? And what trend is market formation on the monthly time frame? So the first thing you want to come to your monthly time frame. We are currently at monthly time frame is showing M. That is 1 month. You can see under it 1 month. So now this is the market. So what this simply means is that every candle you are seeing here took a whole month to form. The whole of a month before this candle, each of these candles to form. A whole month before these candles will complete its formations, the opening and the closing of the candles. So every candle here takes 1 month for it to form. All right. So what are we seeing on this chart? What are we seeing? What trend is the market currently at based on what we are seeing on the screen? You can give me the answer. What trend is this market? Huh?
Downtrend.
Downtrend.
Okay. Uptrend.
I'm hearing downtrend. I'm hearing uptrend. Okay. Which one will I believe? Which one will I believe? Downtrend, uptrend. Mr. Lakunle, what trend is this market on currently? What do you see? What is the trend of the market currently? Mr. Lakunle, are you there? Mr. Lakunle? Mr. Lakunle, are you listening?
Hello, can you hear me?
Yes, I'm getting you, sir. What trend is the market currently, this particular market? Are you seeing my screen? What trend is it?
Yes, I can see, sir. Is it where the black line on top of is, or
No,
just the last
let
green?
me even clear the black line. You don't have any business with the black line. I'm going to clear everything here. Just basically looking at the screen, what is seeing?
Okay, it's
Right.
an upward trend.
Uptrend, or why is your bias so?
Looking at the last green,
All right.
or I don't know, I'm going to explain this now, but from the red down, like it sort of took a downward trend, then it started going up again from the last green line.
Oh, well, we
I don't
come
know.
in because oh, it's all right. I get no problem. So, but your bias is uptrend, right? Okay. Let me check. Who am I asking? Thanks for that, sir. Who am I asking again? Let me ask on that guy. Mr. Ahmed. Ahmed, are you on this call?
Yes, sir. Sir, for me, it's uptrend, sir.
What trend is this?
Uptrend.
It's uptrend. What is it? Why do you stick to uptrend as well?
Jesus.
Yeah, Jesus. When Jesus go and explain for you.
I don't really know how to explain it, but from this green point that has a low swing, abi, can you read to what salary?
All
There's
right.
one green that, yes, from that point it's going uptrend, sir.
Uptrend. Okay. Now we are listening to the guys. Do you have any lady on this call or any woman? Where's Miss Toyin? Miss Toyin, yeah. Miss Toyin, please, what trend is the market currently on? This is oil, actually. Oil against USD. So, Miss Toyin, what is your bias on this chart you are seeing on the screen? Miss Toyin, are you with us? What is it? What is your bias on this?
It's uptrend.
Yeah, follow. Follow no road.
No, based on what I'm looking at.
All right. Based on what you're looking at. Okay. Thanks. So we have three uptrends. Sometimes the Bible says, in the matter of 2 or 3 is truths shall be established. Hope you know. Hope you know it's not in everything. We could have 2 wrong answers. We have 2 wrong answers. All right, Mrs. Faith Wabuzo, please. What can you tell us about this trend on the market chart currently? What is your bias on this chart? Mrs. Faith, are you with us? Welcome to the class. Good evening. Mrs. Faith. Mrs. Faith. I think she's far from her phone. All right, another woman or lady. Okay, Mrs. Ify. This Ify, what is your bias on this market chart currently? What is your bias on this?
Good evening, sir.
Good evening, man. How are you doing, man?
Fine, thank you, sir.
All right, so what bias do we have?
This is a uptrend.
You two uptrend, man.
Yes, sir.
All right. I really wish we could actually define why we call this uptrend, but we don't have that time. I'll have given us classwork. Everybody will draw and explain. We don't have that time. Really. Let me just explain. This is a class. All right. So thanks everybody for responding to that. So this market currently is an uptrend. Everybody get it right. It's an uptrend. I already gave an expo there actually. Yeah, everybody should be seeing the expo. I have a change of character there, so everybody should see that. Now, initially, this market was running on a downtrend. This is it. Let me draw it out. Maybe that was why somebody said downtrend. Let me use it either with down trend line. From this point, we're creating this. This market was on a downtrend up to this point. So I started all the way from here. Why do I call this a downtrend? Why? The formation of what? You can tell me that. The formation of what? The formation of
Low lows.
low lows, right? Thanks for that. Low lows. Yes, let me mark it out. So we had a lower low here. We had a lower low here. We had another lower low here. Then we had another lower low here. Right? So this market was on a downtrend up to this point. Up to this point. Up to this point. But something has changed. Something had happened. You can tell me that. And okay, and we had a what? A lower high here. This is the last. We had one lower high here. Another one here. We had this one here as well. Up to this point. Right? So, what is this now at this moment? Who can tell me what happened that made us change our bias to the uptrend based on all these things I've drawn right now? Based on all these drawings. Who can tell me? Who can tell me?
So
All right, I'm listening.
the movement of the the way the buyers bought the currency, the oil, made it broke. Like there was a change of character in this point, this red point.
Which of the lower lows gave us a change of character?
This last one, number 1.
All right, so correct. Thank you. So we said we have a change of character whereby the market breaks. If it's on an uptrend or an initial downtrend, breaks the initial or the recent lower high. So a break above the recent lower high gives us a change of bias as this market has changes its course to the upside. And exactly what I explained. Let me clear all of this. All right. Let me clear this. Because this is our lower high. Look at what market did here. This one and this one. Market simply broke above them. Markets broke above this. And I explained something that if markets breaks above the initial low, the recent lower high, it will simply go up and come back and retrace it. Do you see that here at all? Are you seeing what I explained during the class last week? Markets broke above these 2 points. Look at markets went all the way, creating this imbalance from here, all the way to this point. We had liquidity sweep to the downside. The markets went all back, but came back, we tested this place 1, 2, 3. So this simply means that patience is the rule of this game. You missed this entry when it went all the way up. No problem. Market came back to this point. You entered again. Boom, you had your profit here. The target is still here. Oh, you were able to catch profit maybe about how many pips? This is 80. Oh, this is 67. And it came to 97. That is about 300 pips to, what am I saying? That is about 3,000 pips. Abi? Yes, about 3,000 pips. That's a whole lot of money, guys. A whole lot of money. Like, you could have been a millionaire right now. You could have been a millionaire right now. All right, so market came down to this point again. You pick it and still came back to this point. When it came back to this point, I already analyzed it that day. I remember analyzing this thing. I already cleared everything, actually. Cleared everything. But I had the screenshot to my phone. That from this point, market is going all the way back to this point. Simple as that. It's clear this point. Then we have a change of character to the upside. I already draw this one for a long time now. I draw this, but I've written this one here. Change of character. That was what gave me a new bias. And check, since we had this break above this point, did we break above this point, below this point again? No. Market hasn't broken below this point. And believe me, it's not going to break below this point, except otherwise. We haven't cleared this major supply zone. So market is not coming below this point. So simply market is going to create another higher high because this was our recent higher high. So what will give us a more confirmation that this market is going to uptrend is that we have to create another higher high. And until we do that, market is still moving. It's still moving. This is as simple as this. So you want to check, the first thing you want to do is on a monthly time frame, what's the trend of the market? So we have confirmed and we have agreed that this market is on the what? It's on the uptrend. Now using trend line, I'll be using all of those things I said I'll be using. Using trend line to check it through as well. We have one close of candle here, start of candle here. Picking it to this point. Simply means market is still up. I already have 2 touch. In fact, almost 3 touch on this. We have our first touch on this trend line, our second touch on the trend line. We have our 4th touch on the trend line. Simply represent that this market is still going up. That is still the indication we got here. So our bias is still uptrend. Still an uptrend. Are we clear on this, guys? Any question before I proceed? Any question before I proceed?
Question, no. I don't hear anything.
Or,
My network went.
you did not hear anything?
My network went off. Just coming back.
Oh, okay. Any other person with question? I will recap on that. Any other person with question? Yes or no? No questions. Right. So let me just do a quick recap before I continue. So I said the first thing you want to do when you want to analyze the market is to check the trend of the market in a wider time frame, in a large time frame. Using that, this system is what we call top-down analysis, right? So we started with our monthly time frame. Now, the bias on the trend we have on this monthly time frame is that market is currently on an uptrend. And what gave us the confidence for that? Recently or initially, we had the market was on a downtrend because we had lower low here. We have more formation of lower lows. Now, market came to this point. Instead of giving us another lower low, it went all up and broke this lower low, and lower high rather. Instead of the market to create another lower high, market broke above this recent lower high, broke above this first one, above the second one, and went up to create so much highs. Gave us this is the second higher high, this first higher high, the second higher high. The market simply came down to this breakout, and it has been holding these points for the almost 3 times now, testing. So the very strong support for this market currently, and this simply gives us the indication this market is going on an uptrend. Number one reason is that we broke above the recent lower high, and we have a change of character to the upside. So we want to identify the market trend on the wider time frame, which is monthly time frame. So on the monthly time frame, the market trend is bullish currently. And here we have double, in fact, we almost have a double top on bottom here. Somebody asked that question. That was last week. Look at W pattern. This one. We have picked the second leg of W. This market is going up for every reason. So that was where we stopped. So on our daily, on monthly time frame, the first thing to do is to know our market trend. Second thing you want to do, let me clear all of this. Second thing you want to do is that you want to mark out your zones. Major zones on the monthly time frame. Major zones. We have our first zone here. Tracing it backward, as the market be reacting to this, of course, yes, look at market has been reacting to this zone even many years ago. This is what's here. This is December 2005. It don't far. So this is a very strong zone for crude oil. The very strong zone. Anytime markets come to this price, it reacts to it always as a support zone for it. Buyers are always willing to put buys to putting money into the market at this point, even based on past history. Remember, technical analysis done based on the market reaction in the past, present, in the past and in the present, right? So this is our first zone we've got here. We have a first zone, and zones are where markets react to so significantly, either having issue breaking above or holding the markets to continue uptrend, right? These are zones in the market. So what gives us the notion of drawing these zones? Market had issues of breaking below this zone. So we call this our first zone. We had other zones below, but we are more concerned about this change of character here. So start marking our zones from here. We had our first zone. Where is our second zone? Let's check it out. I'm seeing another kind of reactions at this point. Markets be having issue at this point. Breaking above this point. Always be an issue for the market. And we have another zone here. Currently where the market is even at. This is another zone. It's been acting as both support and resistance for a while on this market. Acting as support or resistance currently. It added as resistance here. Market had difficulty. Immediately the market broke out from this point. This resistance lower high. It came to this point, had issue, had a flash down back to the breakout. On the monthly time frame, take note of that. This red candle took a whole month to form. A single candle. That is what called bearish engulfing candle pattern. Candlestick. Bearish engulfing candlestick. It flashed down so much and cover up, swallow up all of these bullish candlesticks. Right? So the market successfully broke above it and it held it as a support zone till we had this. Market came down, it stopped at this point, went back up to this point, then broke below it again. It broke above it again, broke below it again. Now we're having difficulty of breaking above it again, and a successful break above will give us a ride to the upside. So this is another second zone we've got here. Based on past history as well, look at this place. Or from this place, look at it was holding as a support zone. Holding as a support zone. And look at here, it was holding as a resistance zone to the upside. So these are what you use to identify your zones in the market, to mark out your zones. So let's look for another zone in the market. Based on what I've taught you guys, this should be easy now. We take note of whatever things you can get here. Now, I'm seeing another zone here. The way I'm drawing is simple, very simple, very simple. That is it. It's very simple. It's not difficult. Nothing is complicated here, guys. Just draw out your zone. First on the monthly time frame, and you have it on weekly, on daily. Are we getting this, guys? Are we getting this?
Yes, sir.
All right, so we have our third zone here. Why do we talk about this? All right, let me shift this down a little bit. Based on market reaction in the past, this zone has been holding so much. It's been a relevant zone on this market. Now look at it. Here, currently where the market is at, it had a resistance. It served as a resistance breaking above it. It was this zone that pushes market back to this point. That is one. Based on past history, this was 2013. Markets had issue breaking above this point. Immediately it broke above, was holding this place as support for a long while. All these are support. So these are places market react to so significantly. So significantly. These are major zones. And now I'm already seeing another zone. So you want to draw out all your zones in the market to know where you're going to put in your take profit, your stop loss, all of that. This is another zone. There's another zone here. Based on past history, it was acting as a resistance. Look at acting as resistance at this point. A break above it here came back to the point, retested a little bit to the upside and broke below. So on our monthly time frame, we've got how many zones so far? We still have our, I think the last zone we've got here now is this. And this was the last higher high the market had before we went to the downtrend. This is the last zone, last major zone. Or this is another zone as well, this particular point. But not really. Yeah, it's a major zone as well. So this is our overall. So if market is coming upside again, as we've said, this market has to come and create this higher high at this point for us. This is our last higher high we had. That's to create another higher high here. So this is 1 month time frame. Let me go to now. We are going to go to weekly time frame. Since we have successfully marked out our zones on the monthly time frame, what we do is that we go to the weekly time frame. Let's see. Why we do that is that as you go down the time frames, you will see some minor zones as well, because markets always react to them no matter how minor it might look. So on weekly time frame, let's go there. This is weekly time frame. This weekly time frame. I think weekly time frame is still saying the same thing as our monthly time frame. Yeah, weekly time almost always the same. It's always the same actually on monthly time frame and weekly time frame. So they are still saying the same thing. And this particular point is more visible here. Look at it was a single stretch to the upside on the monthly time frame, but here we're having multiple stretch. So that simply means we have a minus zone here. And I said it earlier, we have a minus zone here. I didn't just draw it out. But since market reacted to it twice on a weekly time frame, that means it's a zone as well in this market, kind of major zone in this market on crude oil. So markets will also react to this. So this is of drawing your, what is it called? Doing your trades on what? Based on top-down analysis to check out all of these zones to see market reaction. So this is weekly time frame. There's nothing much to do dwell on this. And look at, we hear this position so much as a support zone, 1, 2, so much pattern from there, 1, 2, 3, all of this. Did you get this, guys? So this has been holding so much. Now let's go to the 1 day time frame. 1 day time frame. Now this one is becoming so much interesting. So much interesting. I'm gonna widen this thing so much. All right, on the daily time frame as well, market is still reacting to it. And look at this trend line, it's even holding so much. This trend line be playing so much on the daily time frame. Isn't it trend line? And on our zones, it's still the same thing with the ones we've drawn so far. Still the same thing. So currently on the daily time frame, this market is currently on this zone, this particular zone. It has been holding this place as a support for a while now. Holding it as a support for a while. Why that? We've seen quite some movement here. Look at. Market's been reacting to this zone for a while now. And look at the spike up we had here. This bullish candlestick we had here to the upside. So this is simply how it works, guys. Just break it down to every time frame. And check the market reaction to it. So monthly, daily, on weekly, daily, we still seeing the same thing. We are still on the uptrend, and our zones are still very, very valid. And why the market is still reacting to this point, rejecting on the daily time frame, we are seeing why more and more. Look at this zone now. It's holding as a minor resistance zone. Minor resistance for us. Look at even based on past history. So this is why the market has been rejecting this point. Reason why market has been rejecting this point to the upside. On a daily time frame, we are seeing this, whereas we are not seeing it. We are only seeing it on a monthly and on the weekly time frame. This is the reason, guys. To help you, we are day traders. Had it been this a swing trade, I would have picked this. I saw this particular market. Okay, since last year I've been following this particular pair. Since last year I've been following all of this, and I would have picked it from this point. If I was to be a swing trader, I would have picked it from this point. In fact, I saw it at 68. Around 68 last year. I saw it around here. Yeah, this is 69. That was December, but I saw it around. Was it October? It was at this point, December 23. Yeah, I saw it at this point. So if I'm supposed to be a swing trader now, I'll have picked this market all the way from this place. That is what point 67.67. to where it is right now, 81. That is a whole lot of pips for me, guys. More than that is almost how many pips already upside? A lot of pips. So, but we are day traders. We have to check this to the smallest of the time frames. Now back to our daily time frame. We are here. Let's go to the 4 hours now. Are we seeing more opportunities in the market? More support or resistance? More support or resistance. These are 4 hours. We are more concerned about what the market is doing currently now on the 4 hours time frame. As you go on lower in the time frame selections, you are more concerned about what the market is doing currently. Look at this. This place was holding as a more strong support zone. This our particular zone. We had more support zone here. And now look at the line we drew earlier. It's holding as a support zone. Currently, it has broken above. That's broken above this particular line now. So we are holding this place. Currently, I actually drew this. Okay, look at these two lines. This happened today. This bounce back you saw here happened today. Let me widen this. Maybe you guys see it very well. You guys see it very well. All of this reaction you are seeing, we're on a month. What is it called? We're on a 4 hours time frame. Now this candle is still forming. It doesn't close yet. If we close above this point, above this zone now, simply means market is going to continue its up move from here. But if we close below this point, that means we are coming to this point. Simply means we are coming to this point. If we close below this zone, simply means we are coming to this point. Then we hold this place as support, continue the right to this point. This is our next target on this market. Now this is 4 hours. 4 hours is still confirming an uptrend for us. So this is very simple, guys. Just do this 45 minutes. I realize 45 minutes is quite effective these days. I use it very well. Still doing the same thing. And it's more clear. Look at it. It's been holding this point as a support zone. We had a single break this afternoon and a spike upside again. And now we are holding at this zone. So a close above this zone simply means we are continuing our uptrend. But a break below this zone simply means we are coming back to this place to hold this our support zone. Simple as that, guys. And using trend line as well, this market is still showing a very strong uptrend. Even on this 45 minutes, look at trend line reactions here, holding so much. Market is in an uptrend. So every day you just wake up, there's always an opportunity for you to trade the market. So don't get freaked out. Oh, I missed an opportunity yesterday, I couldn't get an entry, whatever. Just be calm. And once we start our trading, actually, you get to learn all of this. I'm going to teach you guys discipline and patience. We might even, from morning till 4 o'clock, if you don't even enter any trade, until maybe 4 o'clock, if you see an opportunity. So this is it. Very simple. Let's go to let me just rush down to the 15 minutes time frame. This is where I execute my trades. What do you see on 15 minutes time frame? Saying the same thing. Saying the same thing, guys. The same thing. We are still holding this place as a very strong support zone. And look at market has been reacting to this zone all the way from here. We are still reacting to this zone. Bounce back here, bounce back here, bounce back here, bounce back here. We had a break below here, and we have liquidity sweep. Immediately, liquidity just sweeps it up back. This is smart money concept. People are just they just pack stop loss here right now. They just pack people's money a whole lot right now. So it was a quick swap to the downside. Within 15 minutes, it went all the way back. I actually took this trade. I was on this trade earlier this morning to this place. I took profits. I allowed it to retrace back to this point. And I picked profits from here to this point. I opted out again. As simple as that. So this is simple. This is how you analyze your market. Top-down analysis. This is how you analyze your market. Top-down. We entered the market on a 15 minutes time frame. Remember, we started from 1 month time frame to check the general trend of the market. Remember, we said market structure is the overall condition, overall view of the price charts. As simple as that, guys. So, in view of this, if you've got any question before I check another example, and I'll check all of those entry strategies I talked about. In fact, this is the best entry strategy. I don't have to teach you guys anything. We're going to be consistent with using this. So, do you have any question before I continue? Any question? Or are you guys not even on this call? I don't even know. Any question? Any question? Anybody asking a question? Are we getting this thing at all?
Yeah, we have.
Yes.
So, any question? Let me even make a quick survey. Will I ask this question? Mrs. Faith, are you still on this call? Mrs. Faith, she's not. Miss Afolake Adefioye. I want to make a survey quickly. How has been the class to you so far? Are you getting anything? Am I teaching well? Am I kind of making it complex for you guys? Miss Afolake, can you tell me that? Let me make this quick survey.
Good evening, sir.
Good evening, ma.
Okay, so I'm fine. So far, you've been teaching us so well, but I'm trying. I'm trying to understand.
You're trying to understand.
I'm trying.
But
Yes,
the
sir.
teaching hasn't been so complex, right?
No, not at all.
All right, I want to be sure of that. So that's all right. Let me ask another lady. Who again? Miss. Thanks for that, Miss. Afulake. Miss Toyin, what can you say about that? Have I been complex about this class so far? Are you Am I coming to you guys' levels? Like, am I coming to the beginners levels at all? Or am I just
Yes, sir. You're at our level. Like, you just break everything down for us to understand.
all right?
So,
I just thanks
my
for that. My
own,
really on your own, Avi. You're right. It's all right, but thanks for that. So let me ask the guys. Mr. Best. I don't know. I didn't save the name. Mr. Best. Best. Who is Best?
It's me, Molly.
Oh, Mr. Imole. What's up? Good evening, sir.
Yes, sir.
So what can you say about the view of the teaching so far? Is it being complex or why are people leaving the
No.
call? All right.
Yeah, the teaching so far hasn't been complex. It has been good, but I've been having issues with network and trying to come online. So I don't know. Even right now, my network is still breaking. I
Oh,
don't know
network.
what to do. Yes, I've been having network issues for the past 2 weeks now. So even the last time I couldn't join the class because I was even using Edge. So they know how Edge can do anything. So I've been the class has been wonderful so far, but though I've been missing some parts and I just wish to go back to it. But it's fine. The class has been so good from the beginning
All right.
down to this time. It has been so good. Just
All right. Thanks
my
for that.
network has been
It's all right. For that, I think about this network issue, this MTN issue. But nevertheless, I think I'm recording this video. I'm gonna drop it in class, and I'll be dropping other classes as well. Other videos we've made, except the one we did on Sunday. I've been dropping them. So I don't believe there should be an excuse really. What you just use to go back to the videos, download them, and watch them often. At least even though it's 5 times, watch those videos to get understanding of that. Right? So
yeah.
today's video,
Yeah,
I think I'm recording this as well. So I think I'm recording this one. I'll post it to the group after the call, and you guys should just watch over and over again. So let me just make a quick example based on what I said I was going to talk about. The strategies we're going to use for entries, demand and supply zones, right? Very simple stuff. Demand and supply. We have, that's basically what I'm going to be using. So let's go back to the charts. Go back to the charts now. Let me go to 4 hours time frame. 4 hours time frame. 4 hours time frame. Now we analyze this thing on. That was on Sunday. We analyzed this thing that this market was going to go up. Then the market was here. And look at, we came here yesterday. And we're still ranging at this zone currently now. Why do we analyze this today? So I just explained that now with all the zones we draw so far. And based on in fact, let's even stick to this top analysis. It's very simple. Let's stick to this for now. Along the line, I'll be talking about other strategies that I use. But basically, let me use this one to explain. Let me go to daily time frame. I think demand and supply. Let me talk about demand and supply strategy right now. Let me talk about it. Please, let's pay very close attention to this. Let's pay very close attention to this. Let me delete this. All right, let me just delete this so that we have a clear screen. So, demand and supply. I said demand are zones whereby buyers are willing to put money to buy in the market, where many people are so much willing to put in money. And supply zones are zones whereby buyers are willing to, sellers rather are willing to sell. Sellers are willing to sell. Right. Talking about that. This is it. What gives us? I said demand zones are zones whereby buyers are willing to buy and sellers are willing to sell. So this particular I'm talking about right now, supply zones are zones whereby sellers are willing to sell. Demand zones are where buyers are willing to buy. Now, I'm going to cover 2 strategies right now. So we're talking about demand and supply zone right now. No, in fact 3. Fibonacci retracement and what again? Yeah, Fibonacci retracement, demand and supply. Let's talk about that. And imbalance. Yeah, we're not talking about the terminology for imbalance. What gives us the formation of a demand zone or a supply zone? It is simply the formation of imbalance, also called impulse or inefficiency in the market. Let me repeat that. What creates a demand zone or a supply zone in the market is simply the formation of an imbalance, also called inefficiency or impulses in the market. I take that for the last time. What creates a demand zone or a supply zone in the market is simply the formation of an imbalance, which is also called an inefficiency or impulses in the market. Now, this is what an imbalance is. Imbalances is the movement of the market continually without the interference in one direction, without the interference of the other trend of the market. For instance, if the formation of a candlestick pattern is to the upside, that is bullish movement, you will not see the interference of any bearish candlesticks until that formation is complete. It's simply what we call an imbalance. I'm just going to point out that practically you understand that better. So we have this candle. You see this green candle. Let me clean this. Let me make this chart as clean as possible. You see this green candle, right? This was the opening of the candle. It opened from this point and it came and closed at this point. This is simply an imbalance. There was no any green candle inside this. There was no any green candle while this candle was forming. There was no any red candle rather that interfered the movement. So it was strongly on a bullish move for a complete day. It could be on any time frame. I'm using a daily time frame right now. It was fully on a bullish move without the interference of the bears at all on a daily time frame. Whereas normally on the, let me go to 4 hours time frame. You don't see that. On a 4 hours time frame, you see the interference. You don't even see the interference as well. This was it. It started from this point, came all the way here. You see how many candles? 1, 2, 3, 4. There were no red candles inside this. So the market moved to the upside without the interference of the bears at all. This is all we simply call imbalance in the market. I may not really know how to define that very well, but practically you should just get that. We have a lot of imbalances here. For the bearish, this was an imbalance. From this point to this point, there was no green candle inside. This is a formation of imbalance. And this point now, this candlestick, this green candlestick simply signifies that this is a demand zone. This was the beginning of the imbalance and it's ended there. This is a demand zone. This has given us, this just created a demand zone for us. So simply means market could react to this candlestick in different forms. Now, I'm going to talk about that using the aid of Fibonacci retracement. So this is a demand zone. Now I said it could be on either bullish or bearish. For the bullish, it gave us a demand zone. For the bearish, we had the formation of an imbalance from this point to this point. This simply means it's a supply zone. This is a supply zone. This is supply zone. Here it was a demand zone as well. This simply means market came all the way from this up after the end of this imbalance and came down and cleared this demand zone 100%. It cleared it 100%. Then we create another imbalance here to mitigate this demand supply zone. And look, our market actually did too. Now, market is already forming a bearish candle at the moment. The question is, how far will this red candle form before we continue the move to the upside? That is the question. And we'll simply get to know that with the aid of our Fibonacci retracement, Fib retracement, and now this is it. So Fib retracement is used to get to know the point at which we can enter our market, either to buy or to sell. Now, what you simply do, if you are going to check the imbalance based on the bullish candlestick, you're going to start from the beginning of the imbalance, not the wick of the candle, but the body of the candle. Unfortunately, we don't have any wick here. So we're going to start drag your Fibonacci retracement from the beginning of the formation of this candlestick pattern to the end. We are not looking at the wick. This is the wick of the candle. We don't have any business with that. We are concerned about the body of the candle. So we have many levels at this Fibonacci retracement. I have many levels. I already marked mine. If yours will be pointing out at many levels, but mine is just showing I think 1, 2, 3, 4, 5 levels. These are my 50% levels, 61.8%, 78.6%, 100%, and 0% here. Now, if we want to take a buy on this market, you have to wait for this red candle to fall into any of these zones before you can take a buy. You have to wait for this red candle to fall into any of these points. We have 50% here. We have 61.8% here. We have 78.6% here. We have 100% here. Here, market cleared 100%, but it might not be the same case for this. But if at all you're going to take a buy on this market currently, you should wait for market to at least, using Fibonacci retracement, though, market to clear at least 50%, to tap on this 50% of the imbalance before you take a buy. That is it. For a pair like crude oil, which we are currently checking, really, it might not always clear 100%. But at the long run, it might still clear 100%. Look, let's check it backward. Look at here. We had an imbalance here. Market went all the way, came down, played 50%, went all the way up again. Eventually, came back to this point. So it cleared almost 100%. So let's check how far market has been reacting, what level market has been reacting to so much. Market created an imbalance here, all the way down here, up here rather. It came and cleared more than 100% safe. Market from another imbalance here, went all the way up here, but sellers had so much pressure on the market, came down. Market kind of formed this one again. It cleared this imbalance 100%. Now we are seeing more of 100%. So what gives a surety of a strategy is that markets could react to them often. We had the formation of the imbalance from this zone to this zone. Market came down and cleared 100%. So I think for crude oil, market is checking more of 100%. But I don't really use Fibonacci retracement on crude oil. It works so much for me on GBP USD, and that one is 78.6% of the Fib retracement base point. If this were to be a GBP USD trade, I'll wait market taps on the 78.6%. But for this, I use my zones. Market react to zones more on oil, more than more than using I prefer using my zones more than using my Fibonacci retracement, right? Since I'm a day trader. And this is a very strong bullish movement. This market might not have to come to this point 100%. Again, since it has done that already here, might not have to do that. So that is simply what Fibonacci does for you. So the point whereby you sell, if it's based on the, if you are going to take a sell position, this might be quite complex right now. In fact, it's because it's not really giving us a clear example. But along the line, you get to understand this better. If you're supposed to take a sell here, look at markets created this. If you want to take another sell, simply is that we take the sell until the market tap on the 50%. Let me see. All right, yeah. This is the beginning of the imbalance from the upside. If we're going to take another sell, yes, market has to tap on the 50% at least, or 61.8%. And look at market. That's if you have missed this sell position all the way from this point to this point. You have to wait for market to drag it back up to either 50% or 61.8%. Look at what market did. This particular candle came and tapped on the 61.8% before it finally sold to the downside again. It's just as that, really. That's if you have missed an entry, all of that. So this is what happens with Fibonacci retracement. So don't worry, it might really not be clear at this moment. As we continue on this journey together, you get to do this very well. But we are sticking with our strategy of top-down analysis. We are strictly working on that currently. We are strictly going to be working on top-down analysis, guys. We're strictly going to be working on top-down analysis. All right, so that is it for now. So any question before I end this class? Oh, any question? Any question? Do you have any question? Are we still on this call at all?
Yes, sir.
Sir.
Any question?
No, sir, for me.
Do you have any questions? So I believe there are no questions. So let's talk about this. Let me end this recording. So let's talk about what we have agreed